Do you want to become Crorepati, or you are looking for a simple formula to get your first crore following a systematic approach? Then this video is for you. Hello everyone, I'm Shobhit. I'm a Finbase growth expert and founder of Finbase Growth Club. We are an aspiring community of new age mutual fund distributors who are determined to change how India invests. So coming back to the subject, if you want to accumulate 1 crore of assets following a systematic investment approach where you are going to contribute on a monthly or a quarterly basis and you want to amass 1 crore magical number, then I am going to discuss with you what is the formula which you need to follow. Then I'm going to show you what are the 3 important aspects which you need to be mindful of. And then I'm going to give you some cool hacks so that you can fasten your journey to the Crore Club. Now let's first understand what are the most critical part of our investment journey through a systematic route and what are the factors which we need to be mindful of so that we can get that magical number. So according to me, the most important aspects which we need to be mindful of is the time or the duration for which you are going to do the investment. Second, the quantum of money which you are going to invest over a period of time. And third is the return which your investments are going to generate. Now, most often than not, what I have realized that people are going to be concentrating most upon the returns which the investments is going to generate rather than concentrating on the first 2 important part, which is the time for which you are going to do investments and the money which you are going to invest. The important thing which we need to understand here is this. Please understand that the variable for which we are going to put more emphasis on, which is the return which investments are going to generate, is not at all in our hand. Any asset class, any investment vehicle where you are going to do investments, if the fund manager or the investment managers are not able to commit any returns from those assets in the future, how we are able to predict those kinds of return? So that is very sure or that is very clear, or you should be very clear of that thought process that return should be the least priority for us if we want to build a better financial future for us. The concentration should be more on the time for which we are going to do our investments or the money which we are going to put for investment. If we are able to control these 2 variables, because these in our hands, we are going to get a much better financial outcome from our investment journey. So I'm going to share with you a simple calculation which is going to give you an idea how you need to be planning your crore rupees of asset building process. So this calculation sheet I'm going to share with you so that you can get your own thought process going. Now, as I told you, these are the 3 variables which we need to work upon. First is the money which you are going to contribute. Second is the time for which you are going to invest. And third is the return. Now, these all things you can play around, but our target is to get the crore rupees of money from the investment journey. Now, if you look at that, if you are going to invest for 10 years and if the return generated from the return from the portfolio is 12%, then the monthly contribution required from your side is 44,635 rupees. Now I am going to first play around with the time so that I can give you an idea what I was trying to communicate to you. Now let's assume that instead of 10 years, you want to accumulate a crore in 15 years time period. So if you are going to change 15 years here, then look at the quantum of contribution required from your side. It is 21,000 odd rupees. It is less than more than 50%. And let's change this to 20 years. Look at the contribution required from your side. It is only 10,871 rupees. Let's increase five more years, say 25 years, only 5,874 rupees. Now this is very obvious. The longer time duration you have with you or the longer time commitment you have with you, the better or the lesser money contribution required from your side. That's why I keep telling you that our focus should be on the time or the quantum of money which we would be contributing. Now let's change the rate of return. How it is going to impact. Suppose I want to accumulate crore in 10 years time period, then I need to be contributing say 44,635 rupees. Now let's change this investment rate to say 15%. If we change to 15%, then also 38,000 odd rupees is required from our side to do the investment. Let's change this to 20%, then 29,000 odd rupees. So I think now it is very obvious to you that we need to be concentrating more upon the variable which is in our hand, which is the time for which we are going to do investment or the quantum of money which we can put. If we are able to understand this concept that the concentration or the effort from our side as an investor should be the money which we can invest or the time for which we are going to invest, we are going to get a much better outcome. This is the fundamental approach which you need to follow to get the desired outcome of getting your crore of corpus from your investment journey. Now, in case you want to fasten this process, in case you want to get a better outcome, then I'm going to share with you some simple hacks which is going to help you in getting the crore on a faster period of time. So if you are following a systematic route, the first approach which I would like to discuss with you is this, which is you can use a method of incrementing your systematic investment by incrementing either by the percentage or the quantum of contribution which you are making over a period of time. Now this means what? Suppose you are starting your investment journey with say 10,000 rupees per month for building a crore rupees of corpus. Now the one approach can be you can give a predefined mandate to the company or a mutual fund company where you're doing your SIPs to increment that installment by 10% every year for the desired period of time. And if you are going to follow that process, you can fasten your journey to reach your crore club. Other way to approach is you can also look for a quantum increase by the fixed amount. So you can say every year let's increase the amount by say 1,000 rupees. So that is also going to help you in fast pacing your journey to get your crore of corpus built up. Let me show you some calculation which is going to give you a better insight. So just look at this calculation. If you look at this calculation, if we are going to contribute the same amount for the desired period of time, that is we are going to be contributing 10,871 rupees, then in 20 years at 12% rate, we are going to accumulate 1 crore. Now just look at this. If we are going to be giving a mandate to a mutual fund company to increase our installment by 10% every year for the next 20 years, just look at the accumulation which we are going to do. It is close to 2 crore which we are going to build in the same period of time. This means what? This means in the first year, every month we are going to contribute 10,000 rupees per month. In the second year, we are going to increase that by 10%, which is 11,000 rupees per month. In the third year, that 11,000 will be incremented by again 10%. And if we follow that process, then the corpus which we are going to build is close to double or 1.94 crore. Now, in case you want to restrict yourself, you want to just fasten your journey, then just look at the third calculation which we have done. Okay, if you are going to be starting with 10,000 rupees monthly contribution, and if you are going to increase by 10% every year, you will be needing only 16 years to get your crore rupees of corpus. By 4 years, you are able to shorten your journey to join the crore club. Now, this is the way if you are able to approach your investment journey, I am pretty sure that you will be able to get the result faster. Please understand, by this route, you are not taking unnecessary risk. You are taking a guided path and you are going to get the desired outcome. Now, this is the one way which we call in mutual fund as SIP top up, through which you can give a predefined mandate to the company where you are doing your investment by incrementing the SIP amount either by the percentage or by the amount for the desired period of time. And that is going to help us either accumulating in more, or if you want to fasten your journey, you can get the desired outcome from the investment much faster. So this is one approach which you can do. Other way which you can get the desired outcome is by following an approach where you are going to invest more when the volatility in the market is more. This means what? You can invest more when the market is down. You can invest less when the market is up. In that way, your average value or your average cost of acquisition would be much lesser, and if the average cost of the acquisition is lesser, the return generating from those assets will be higher, and then it can help you in fast pacing your journey. Now, there are two approaches which you can look into while you are doing a flex SIP depending upon the valuation. The valuation can be of two types. One is the valuation of the portfolio. It means whatever you have contributed, what is the value, and on that what is the contribution with the future installment going to be happening. Other is the valuation of the market. So if the market PE ratios are less, investment would be more. If the market PE ratio is more, the valuation would be less. So that approach also you can make, and let me give you one example to make it more clearer to you. So here, if you see, I have created a slide for you. Here, what is going to happen in this flex SIP way? Here we are going to be seeing what is the total contribution you have made in the past till the next installment, which is going to be debited from the for the investment. And how it is going to work out, let me give you an example. Just look at this example. If you look at this example, in this example, we are assuming that you are doing an SIP for 5 years time period, and every month you are contributing 5,000 rupees monthly contribution. And if you are doing so, let's assume that you have done your 9 installments and the 10th SIP installment is going to happen. Now, how it is going to work for you? Let's understand that. So the contribution which you have made up till now is 9 into 5,000, that is 45,000 contribution which you have made up till now. Now, how it is going to operate? If the value of the contribution which you have made up till now, that is 45,000 rupees, is less than the or the market value of the investment which is up till now is 45,000 rupees, is less than the contribution which you have made, and in this example I am assuming that the current value is 43,000, your contribution value is 45,000, then the next installment which is going to happen will be 7,000 rupees. How this 7,000 has been worked out? The difference between the market value and the investment value, and that difference plus the regular installment amount will be contributed for the investment. Why the market value is less? The market value is less because market would have corrected or have come down. And that is a good point to invest more. By that logic, this example or this way of investment will work. Now, what is the other way to look into it? Suppose market is going up. So if the value of the investment is more than the what you have invested, then the normal contribution of 5,000 is going to happen. So in this way, we will be able to average out our investment in a better way. And if we are able to do that, we will be able to get better returns from our investment. So this is called a flex SIP, where we are going to be contributing more when the market is down and our normal investments when the market is going up. This is going to help you in fast pacing the asset creation journey for you. Now, how the market valuation is going to work out? The market valuation is going to work out based upon the P or the internal parameters with which the mutual fund companies are going to work with. So if the market is, say, or the Nifty P say 20, 25, 30, they are going to work out a formula, and accordingly they can increase or decrease the contribution through SIPs which you are going to make. That is also one way to do. Every mutual fund company has some new innovative ideas through which your regular contribution or a systematic contribution can go up or go down. I would love you guys to explore these insights. If you are able to get these ideas right, even 1 or 2% alpha you can generate over and above the regular investment return, I think that will be very good for creating an additional returns from your portfolio, or you need to have lesser financial contribution made from your side. So there are a lot of ways through which you can work upon. Edelweiss has come with an idea that they are going to be taking the contribution for the next installment depending upon how the market is going to be corrected. So if the installment for you which you need to pay, or the SIP which is going to be debited on say 10, if on 9 the market is corrected by say 0.5% or 1% or 2%, they can increase the SIP amount for the next installment. So every MC has a different way to approach how you can contribute little more than your regular installments, so that you can get a better price for your investments that is going to help you in getting better outcome from the investments. So I hope I have given you some clarity as how you are going to accumulate your crore. The idea here is to give you a clear-cut roadmap where you want to go and what is the method you need to take to reach that destination. The flex SIPs are going to help you in fast pacing your journey. Step up SIPs are also going to help you in fast pacing your journey to reach your desired goals. I hope you like the content. In case it was useful for you, I would love you guys to hit that thumbs up button, subscribe to our channel so that we can grow and reach like-minded people. Thank you very much for joining me. I'm going to see you next time. Please take care.